What if I told you the future of the global economy won't be shaped by growth, but by limits? What if the world we've built, this entire system of credit, debt, currencies, markets, and globalization, is quietly entering a phase that humanity has faced before? A phase where governments lose control, currencies lose trust, and entire societies are forced to choose between three outcomes: collapse, reset, or transformation. But here's the mystery. Signs of all three are already happening at the same time. So which path are we truly heading toward? To answer that, we need to go back before the 2008 crash, before the dot-com bubble, before modern capitalism even existed. Because the forces shaping our future were set in motion centuries ago, and the clues to what happens next are hidden in the past. Our story begins in the late 1600s, when European kingdoms realized something shocking. No empire, no monarchy, and no ruler could survive using real money, gold, silver, or land-based wealth. Real money was too limited, too slow, too restrictive. Enter credit-based economies, a system where promises became more powerful than resources. With the creation of the Bank of England in 1694, national debt became an asset, not a liability. Wars were financed, trade expanded, and global power shifted from monarchs to bankers, merchants, and financiers. Fast forward to the Industrial Revolution, where machines accelerated productivity, banks accelerated lending, and governments accelerated spending. The economy became something new, an engine that required constant expansion to survive. Here's the twist. Every major crisis since then has come from the same cause. A moment when the system needed to expand but couldn't. To understand how we arrived here, we need to break down how the modern global economy evolved in a cause and effect chain. First came central banks. To stabilize currencies and financial systems, countries created central banks, but in doing so, they also centralized power and the ability to manipulate money. Next came fractional reserve banking, when banks realized they could lend money they didn't actually have, increasing economic activity but creating fragility. Then came the abandonment of the gold standard. Between 1914 and 1971, nations disconnected their currencies from gold, making money abstract, backed by confidence, not metal. After that came globalization. Countries interconnected their supply chains, banking systems, and energy networks, making the world efficient but fragile. Then financialization took over. By the 1980s, finance grew faster than real industry. Money wasn't just used to buy things, it became the product itself. This system brought prosperity, but also a hidden expiration date. A system built on debt, leverage, and expansion eventually reaches a moment where growth slows, debt rises, and trust weakens. And that moment is now. From the 1980s to 2020, the global economy entered the fastest growth cycle in human history. Governments lowered interest rates every time the economy stumbled. Markets recovered faster, debt grew larger. And the world learned a dangerous lesson. Whenever we're in trouble, we can simply print more money. This wasn't just policy, it became a belief system. Whether in the dot-com bubble, the 2008 financial crisis, or the 2020 pandemic crash, each time central banks intervened with even more aggressive rescue measures. The rise of this easy money era made everyone believe the economy was invincible, but the bill was accumulating. Every system eventually meets its limits, and the global economy's breaking point arrived from multiple directions. First, massive global debt. Total world debt surpassed $300 trillion. No empire in history has ever carried this much combined leverage. Second, inflation returned. For the first time in 40 years, inflation surged worldwide because governments printed too much money and supply chains broke. Third, demographic decline. A shrinking workforce in major economies means less productivity and higher costs. Fourth, energy constraints. Cheap energy, the fuel of economic growth, is no longer guaranteed. And fifth, geopolitical fragmentation. The world is splitting into competing blocs: the US, China, EU, BRICS, each building separate financial systems. When you combine these forces, you get one outcome. The old economic model can no longer sustain itself, and that leads us to the crossroads. After every major financial contraction in history, from ancient Rome to the Great Depression, societies entered one of three phases. The first possible future is collapse. Collapse happens when trust evaporates completely. Currencies fail, banks run out of liquidity, trade drops, social order breaks, and governments lose control. Collapse is fast, chaotic, and brutal. Are we close to this outcome? Some economists say yes, pointing to rising debt, failing currencies, and political instability. But collapse is not the only path. The second future is reset. Economic resets happen when governments reorganize the system without total failure. This could involve currency reform, debt restructuring, bank mergers, new international rules, central bank digital currencies, or global monetary coordination. Resets are painful but survivable. The Great Depression led to one. World War II led to another, Bretton Woods, and 1971 led to the fiat money era. Many believe a new global reset is already in motion. The third future is transformation. This is the most optimistic and the most disruptive outcome. Transformation happens when an economic crisis opens the door to a new system: AI-driven productivity, renewable energy breakthroughs, new currencies, blockchain-based finance, quantum technology, or new global alliances. Transformation doesn't save the old system, it replaces it. Humanity has been here before. The shift from feudalism to capitalism, the Industrial Revolution, the Digital Revolution. Every transformation begins with a collapse of old assumptions. And we are standing at the edge of the next one. The clues are hiding in plain sight. Over 50 countries face sovereign debt crises. Half the world's currencies have lost value in the last decade. Inflation is the highest since the 1980s. The US printed more money in 24 months than in 40 years. China's property market, once 30% of its GDP, is collapsing. Japan's debt is 260% of GDP. Europe faces energy shortages and aging populations. These numbers mirror ancient and modern collapses. Rome debased its currency by 98% before falling. The Ottoman Empire did the same. Weimar Germany printed itself into oblivion. Argentina repeated the cycle. The pattern is unmistakable. Debt gives money, printing gives inflation, gives instability, gives reset. We are following the same script, just on a global scale. So, what does this all mean? There are three core takeaways. First, the current system is reaching its natural limits. Debt cannot grow forever. Money printing cannot continue indefinitely. Globalization cannot expand infinitely. Second, a reset or transformation is more likely than a total collapse. But collapses can still happen locally, regionally, or in fragile nations. Third, the next 10 years will reshape everything we know: money, work, trade, technology, power. The global economy is not just changing, it is being rewritten. Every major economic shift in history felt impossible until it happened. People living in Rome never imagined the empire would fall. People in the 1920s never imagined the Great Depression. People in 2006 never imagined the 2008 crash. Today, we stand at the edge of a transformation few are prepared for. The question that will define our future is simple. Will we collapse under the weight of our own system, or rewrite it into something entirely new? If you want more deep dives into economic history, global finance, money printing, and the future of our world, make sure to like this video, comment your thoughts below, and subscribe for weekly documentaries on money, power, and the hidden forces shaping our world. The future is uncertain, but understanding it starts here.